a sense of where things are headed. As far as Wall Street is concerned, in fact, as we speak, Dow in the positive territory, it has opened in the green. However, it is S&P 500 that is leading the fall today, led by technology shares, and this just before we're set to hear from the two-day FOMC meet as well. Remember, bond markets are closely watching out for the Fed chair's word on where from here in terms of the treasury yields, and just before that, we're seeing the 10-year treasury yields hitting a fresh 13-month high of 1.67%. So any kind of a commentary coming in on economic recovery, and of course on whether there will be any kind of yield curve controls as well, will be clearly watched out for by the bond market traders as well. So let's talk about all of those cues with Peter Cardillo. He's joining in. Peter, hi, good evening. This is Ruchi Bhatia. I first want to begin by asking, what would you be watching out for in terms of the commentary coming in by the U.S. Fed chair today?
Well, I obviously am going to be watching and listening very carefully of what he says about inflation. There's no question in my mind that the Feds are not going to raise rates. They're going to stay pat. And I think, the big question here is, does the Fed chief, both in the communique and in his oral comments during the press conference, how much does he really address in terms of inflation? Now, for many years, inflation has not been a topic of conversation, but that's changed recently. And one of the reasons why we see this big spike in interest rates is because there's fear that inflation can perk up over the next 4 to 5 months. And so I think this time around, the Fed needs to be very careful, and they need to address the fact that if inflation should get to levels beyond what the market is expecting, that they may need to act, whether it be in raising interest rates or some cosmetic method. That, I think, is going to be the central theme. And as you can see today, the market is down. We have the Dow that's up a little bit, and that's due because of old economy stocks that are up, the banking sector for one. But we see that the S&P and the NASDAQ is lower because the higher rates are affecting the technology sector.
True. Also want to understand from you, do you think it's come in as a big relief at a time that there were concerns about AstraZeneca's shots causing blood clots, and thereafter we did see that countries like France, Germany, Italy, they had all paused on the usage of the AstraZeneca vaccine. Yesterday, EMA said that they will be coming out with their decision on Thursday. And just ahead of that, we're seeing the WHO saying that the benefits for Astra vaccine far outweigh the kind of risks, and they have recommended the usage of the vaccine once again. Do you see that this is coming in as a big relief for a lot of the countries that want to really move ahead with their vaccination program, because ultimately that is something that we're betting on for the recovery, for across the globe?
Yeah, I think so. But I think the big relief will be once they've established that perhaps the people that have had sudden deaths may have not been correlated to the to the vaccine. In fact, this morning, while I was reading my Italian papers, there were 3 cases in Italy, and the 3 cases were not correlated to the vaccine. They died of other causes. So it was just a coincidence, and hopefully that'll be the case.
Okay, all right. On that note, Peter, appreciate you taking your time out and speaking with us today at ET Now.